In May 2022, more than $60 billion in value vanished from the crypto market in just a few days. Not because of a hack, not because of a software bug, but because a system behaved exactly as it was designed to. This is the story of Terra Luna. Its native token is algorithmic stablecoin Terra USD, and the founder at the center of it all, Terraform Labs founder Do Kwon. Terra was a blockchain network. Its native asset was Luna, which was used for network governance, transaction fees, and most importantly, to absorb volatility within the system. Built on top of Terra was Terra USD, or UST. UST was designed to function as a stablecoin, meaning it was supposed to always be worth $1. Unlike traditional stablecoins, UST was not backed by cash, bonds, or dollar reserves. Instead, it relied entirely on an algorithmic relationship with Luna. The idea was simple in theory. At any time, one UST could be exchanged for $1 worth of Luna, and $1 worth of Luna could be exchanged for one UST. This created a mint and burn mechanism. If UST traded below $1, traders could buy cheap UST, burn it, and receive $1 worth of newly minted Luna. If UST traded above $1, traders could burn Luna to mint UST and sell it at a premium. These arbitrage incentives were supposed to keep UST stable. No reserves were needed, only market behavior and code. The system was built and promoted by Terraform Labs, co-founded by South Korean entrepreneur Do Kwon, who became the public face of the Terra ecosystem and its yield-generating products. But the system relied on one critical assumption, that Luna would always have enough market value and demand to absorb shocks. There was no hard collateral backing UST, there was no limit on how much Luna could be minted, and there was no circuit breaker if confidence collapsed. The system had an accelerator, but no brakes. In early May 2022, large amounts of UST were withdrawn and sold on the open market. The price slipped below $1. To defend the peg, the protocol minted massive amounts of Luna by burning UST. But as more Luna entered circulation, its price began to fall, and as the price fell, even more Luna had to be minted to absorb the same amount of UST. This feedback loop quickly spiraled out of control. Within days, Luna's supply exploded from hundreds of millions of tokens to trillions. Its price collapsed from over $80 to fractions of a cent. UST lost its peg permanently. This became known as the Terra death spiral. In theory, arbitrage should have stabilized the system. In reality, it failed. As Luna collapsed, liquidity dried up, slippage increased, blockchain congestion slowed transactions, and the risk of holding newly minted Luna became extreme. Rational traders stopped participating. The code assumed rational behavior. Panic is not rational. Looking back, the warning signs were clear. UST had no hard collateral. Its stability depended on reflexive token mechanics. Demand was artificially boosted by Anchor Protocol, which offered yields of nearly 20%, returns that were subsidized rather than sustainable. As long as confidence held, the system appeared stable. Once confidence broke, the design could not recover. In the aftermath, authorities took action. The US Securities and Exchange Commission sued Terraform Labs and its co-founder Do Kwon, alleging a massive securities fraud tied to the marketing and sale of Luna and UST. In 2024, a US federal court found Terraform Labs and its founder Do Kwon liable for defrauding investors. Kwon later pleaded guilty to fraud-related charges. Terraform Labs and Kwon were ordered to pay approximately $4.5 billion, including the transfer of at least $204 million to the Terraform bankruptcy estate, along with additional penalties benefiting harmed investors. Kwon was also sentenced to 15 years in prison. Terra did not collapse because it was attacked. It collapsed because its assumptions were tested by the market and failed. In the end, the code did exactly what it was told to do, and that is what broke Terra. If you want more short, factual documentaries explaining how technology, finance, and systems really fail, subscribe to TechGaged.